Yo, what is going on, everyone? Today we're going to talk about trading support and resistance with a pivot level. Now, with support and resistance, I'm going to explain it a little bit for those of you guys who don't know, or anyone who's a beginner, so they have a good understanding of what support and resistance is. And from there, we'll jump on to how to trade it with a pivot point. And from the pivot point, we would be trading with a trend line strategy after the pivot point's created to further analyze the pullback from either the resistance or the support zone. So I'm going to share my screen, and we're basically going to jump right into trade view. We'll just look at one screen, and then we'll look at a US currency. Great British Pound, USD would be a good example. And then we'll go into the 1 hour time zone. 2 hour time zone works just as well. Cool. So right here, this is a great zone to explain this strategy and how it would work. We'll back out a little bit. Okay, so what is support? What is resistance? First things first, resistance and support are zones where price tries to break through, but has a hard time breaking through them and reverses from them. So if this black line, which I'm going to mark in green so you guys can see, this black line is going to be our resistance, and then this red one right here would be our support, right? So red is support, green is resistance, right? As you can see here, in multiple occasions, price tried to break through but couldn't. Therefore, as soon as it starts to mark different points of where it's not breaking through, it becomes a resistance point. And then down here, price broke through towards the upside, tries to come down and break through again, but it couldn't, right? And then over here, it couldn't break down through it. So this is a support zone, right? So again, resistance and supports are zones where price does not break through, but often has a pull back from. And the whole point of the pullback is so price could, let's say, gain momentum after the exhaustion it had. So here's what I mean by gain momentum after the exhaustion it had. From right over here, from this pivot point, price goes up and breaks through, and as you can notice, it doesn't go straight up. It has like a little pullback right around this area from the exhaustion of this huge movement to recuperate itself and have a small retracement to then go up again, right? And then it falls into a phase of consolidation, which in this phase of consolidation is where we would trade pullbacks from. Now, what is a pullback? A pullback is where typically a market is either in a uptrend or downtrend or consolidation, and it has a zone of retracement and basically switches the direction that it's in. Now, if it's in an uptrend, it does not mean that it's switching trends. It just means that it's going upwards to retrace itself and have a small pullback to then go up again. If it's in a downtrend, it means that it's coming down to have a pullback, again, another retracement to continue going down. Or if it's in consolidation, then it's having these types of, let's say, directional pullbacks, which really changes the direction which the market is going in. Either way, it's consolidation, so it really doesn't change the trend, right? It just changes. It just means that the trend is taking either a pause or there might be a switch in direction and trend. Right, so now that you understand what support and resistance is, you understand what a pullback is. This strategy is very, very simple because you're only using one indicator, right? And this indicator, if you go up here on trade view, you're gonna mark in pivot point high low, right? You click it and you don't have to go into the settings and change anything. You don't have to do anything with this indicator. The great thing about this indicator is once you mark out different points in your chart of resistance or support, you could trade with this indicator. So here's why I use this indicator. It shows you where, let's say, price reaches to the highest point it reaches to, right, in that time frame, right? As well as soon as this indicator is formed, as soon as these numbers are formed for you, it gives you the opportunity to trade this and trade the pullback from this, right? If not the pullback, the new commencement of a new trend or a new direction. So as you can see here, we're going to look at this example, right? And as soon as this line is marked, let me make this chart a little bit better for you guys. As soon as this is marked, right, You see this red candle? This red candle is where we're going to draw a trend line strategy, right? A trend line strategy is it's the easiest thing in the world. All you're going to do is grab a horizontal ray, draw it from here, draw another one, and then these two lines, right? That zone right there would be your sell zone because it's a red candle, right? That's after the pivot point is marked, right? So that's your sell zone, right? What you want to do is await a second candle to open. And once the second candle has opened below the first one, you would enter in for a sell. And then obviously your stop loss, if we use a horizontal one, your stop loss will go up there. And then your take profits, you could have one here because there's a zone of resistance, right? You could have another one right here. And then you could have one below if you trail your stop losses. It all depends on the type of strategy. It all depends on the type of style you have of trading. If you're a scalper, you're gonna look in for quick pips and you're gonna look in a lower time frame to use this type of strategy. If you're an intraday trader, you'll use it at the 1 hour to 30 minute. Basically the same time frame I'm using it at in this video. So after the pivot point is marked and a red candle is marked, and you see that there's also a zone of resistance, obviously the market's gonna have a pullback, you would use this type of strategy. If we were to use this with the scenario of you buying the market, this is how it would look like. Market's gonna break down, right? Be careful with pullbacks. Fake outs, fake pullbacks, which would be this kind of scenario, right? Where it would pull up to then just come down even harder. How do you prevent this? Is wherever your support line's at, if it does not touch your support line like it does here, where it's touching the resistance, right, you would not enter this. You would enter this once it touches it. So the touch is like a small confirmation. So right here with this blue candle that's formed, it touches it. It forms out the pivot point for you. As soon as the blue candle's formed, you're gonna draw 2 horizontal rays, right? And then that would be your buy zone. So with this buy zone right around this area, as soon as the second candle is marked, you will go into trade and you will draw out your long position, which in this scenario, you're risking about 90 pips to gain about 243. So this is like a 1 to 2.5 ratio. Any type of trade where I double or triple what I'm risking, for me, is a good setup. Depending, of course, on the setup that you have and what type of strategy or approach you are taking towards the trade. But this is how simplistic it is to use this type of strategy with one indicator, right, on pullbacks from support or resistance. Now, how do you use this when you are trading trends, right? There's not always going to be consolidation. There's going to be majority of the time a trend. When there's a trend, right, and the first one is marked, right, here's how a trend will work. You have higher highs and higher lows, right? You have a higher high, then higher low. Let me actually use an Elliott 5 wave to describe this thing. Elliott 5 wave, cool. So you're gonna have a higher high, higher low, higher high, higher low, and then here, it begins the consolidation. But through this zone right here, we're gonna work, right? Let's say you missed a trade right over here. It comes up and it has its higher high. As soon as it has its higher high, it's gonna mark out the pivot point for you. So what you're going to wait for is for the market to break down, right? And as soon as this new pivot point is created, you are going to use your horizontal rays, right? Mark that zone, right? And then that is your buy zone, right? What you're gonna wait then is the second candle to be created, right? You want a second blue candle to be created above the zone, right? Which in this scenario had a small consolidation here to then finally break towards the upside. And then that's how you would use it in a scenario where the market is going in an uptrend, in a downtrend. You'll use it in the same scenario. I could basically mark it here. As soon as you see the pivot point being created, you would use it. Here, you actually cannot mark it out due to the fact that there is no pivot point being created. This was just a strong movement towards the downside. This is mostly used when pivot points are created for you. The pivot points are going to act as a small indication of when this strategy could be used or not used. But overall, this is how simple it is to use this simple strategy of trading pullbacks or trading retracement levels from a trend using pivot points and a trend line strategy.